Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday the 30th of April 2020, and yesterday we published a video entitled, Are investors likely to reinvest in equities soon? And we've provided a link to this video in the description box below. Well, yesterday we had Jerome Powell's comments, and we thought it appropriate to wait until quite late today to see how markets have responded. And for gold and silver stackers, it's either good news if you want to buy and bad news if you want to sell. So as we produce this video podcast, the time is 19:10 GMT+1, gold is currently $1,685. That's $21 down on the day and $44 down since Monday's opening. Silver, likewise, is also down. It's standing at $14.88. That's down 38 cents today and 40 cents down since Monday's opening, with a gold to silver ratio of just over 113 to 1. Now, interestingly, the dollar index is also down, almost half a point at 99, and so too are equity markets. Whilst most European markets closed down between 2 to 3% today, the Dow is currently down, and it's not closed yet, at 1.4% at 24,289. The S&P 500 is down 1.29% at 2,901, and the Nasdaq is down 0.7% at 8,851. Now, we have pointed out that gold has quite a strong support level at $16.80, and silver has similar levels of support at $14.60. And it would not go amiss to notice that both gold and silver are currently resting at prices just above these figures. Yesterday, the Fed signaled that it still has additional resources to support the economy if necessary. And that is indeed bullish for precious metals and bearish for the US dollar, particularly as they seem to give the impression that we may very well have unlimited QE. Now, yesterday's Q1 GDP rate of minus 4.8% was also disappointing when considering a positive 2.1% for Q4 of 2019. It's not out of the ballpark to expect the next quarter's GDP rate to be even lower. The initial jobless claims announced today at 3.84 million brings the 6-week total since the start of the lockdowns to more than 30 million people. The problem is that these figures could be similar again next week. And it's difficult to gauge exactly when this unemployment rout will stop. So, strictly speaking, all of these figures really should have acted as a tailwind for gold, but an understandable small headwind for silver. Now, we're sure a number of listeners will be asking, why has gold prices fallen? Well, there are a number of reasons, but frankly our main assessment is that it's a squaring of the books at the month's end. This view is supported by Tyler Ritchie, the co-editor at Seven's Report Research. This is what Tyler Ritchie had to say. Quote, gold bulls will want to see stable interest rates and renewed recovery in inflation expectations in order for a rally in gold to continue. That's something we're not necessarily seeing today, and gave some traders an excuse to book profits into month end. For gold, the two key factors to follow are interest rates and inflation expectations, as they are the inputs for the equation to calculate real interest rates, and ultimately real interest rates have a major impact on gold's appeal as a safe haven asset. If real interest rates are rising, then short-term treasuries become more appealing as they provide an yield. But if real rates are falling, as they did for much of Q1, then gold becomes a better store of risk-off capital." Unquote. This is what he told MarketWatch today. Needless to say, with the oil price having fallen to quite unprecedented levels, this in turn is going to lead to lower inflation rates, certainly in the short to medium term. Now, whilst the European Central Bank held interest rates today at current levels, in a press conference, ECB President Christine Lagarde said the Eurozone economy could fall between 5 and 12% this year. Similarly, the Fed held rates yesterday, with a Fed funds rate of 0% to 0.25%. You can probably see that the main central banks are to some degree acting in similar fashion. So, a mixture of profit-taking and announcements of economic figures broadly in line with expectations, albeit all bad, have quite frankly dampened the gold and silver prices. Silver, of course, suffering more due to the envisaged slowdown in industrial demand, as we've preached literally for months, if not the last couple of years. Now, what gives us the confidence that we should not give up on gold despite its price fall today, but to view this dip as a buying opportunity, with a caveat, however, is that the World Gold Council has just announced that investment demand for bullion soared in the first quarter as the result of safe haven appetite for the precious metal. Total gold investment demand, and it's important, please, you listen carefully to what is said here, total gold investment demand, which includes bars and coins and gold-backed exchange-traded fund investments, climbed by 80% year over year to a 4-year high of 539.6 metric tons in the first quarter. That figure included inflows of 298 metric tons, in other words, more than half, for gold-backed ETFs to record high holdings of 3,185 metric tons for the quarter. Total global first quarter demand, however, edged up by just 1% from the same period last year to 1,083.8 metric tons. Again, listen please carefully here. The GFMS team at Refinitiv reported today that physical gold demand, including jewellery, industrial fabrication and bars and coins, so not counting ETF-backed gold, fell 26% year on year in the first quarter to 753 metric tons, the lowest level since 2009. Including exchange-traded fund flows, total global demand was up 2% at roughly 1,070 metric tons for the quarter. So it's an interesting comparison here. So all those on this channel and those who follow the pumpers channels, who keep criticizing the whole concept of paper gold or holding gold in offshore accounts or via ETFs, will perhaps be very surprised perhaps to learn that frankly it's these paper accounts, or those accounts allegedly backed by gold, which have caused to a large extent the gold price to rise. And this is in spite of what certain people on YouTube will have you believe. Now that said, we're still very positive gold, and eventually will be positive silver once industrial demand begins to rise. Now tomorrow we have the market manufacturing PMI figures for April, plus the ISM manufacturing index for April. and motor vehicle sales, the annual rate for April. And these could have potentially a further effect on markets. Now, tomorrow we shall produce a video which will go into more depth, covering the World's Gold Council report for Q1. And we're quite certain you will find that of some interest. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Not forgetting that we update the Richard and Greg channel every few days, and if you haven't already done so, please kindly subscribe to that one too. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.